Travel is an extremely important part of our investment process. I think having a team which has personal roots and connections to the emerging markets is a big advantage. It gives us a great starting point. It lets us understand the consumer in more depth. And also, as part of good due diligence, it's important that we regularly meet management, especially given the increased risk in emerging markets. The reporting processes, the communication is not necessarily consistent across companies, so we find that we do regularly need to meet management. We can't just rely on reports or on our screens.
The analysts travel extensively to emerging markets, to the regions in or outside of the index. And when they go there, the point of these visits is really to understand the dynamics of those economies, the type of opportunities. Somebody with a lot of experience in a part of the world, a Chen Gu that has been covering her universe for 20 plus years, she is the best equipped person to, in her parts of expertise, identify the new opportunities, whether they are or not in the index.
The reason we travel is, number one, that we want to see the company in their natural habitat, and we want to see whether when we go to their headquarters or factories, that is what management has told us or what we have read, either in sales side research or in any other articles that came to us. And number two is there's just some uniqueness about different market. For example, in China, when we think of buying sportswear, you just go to Dick's or maybe Foot Locker. But in China, each brand have their own stores, and the stores are broke down in 3 categories. So for example, Nike will have a Nike Core, which is sit in one location. Then maybe you go to in the same department store, there will be a Nike Kids, and then will be a Nike Fashion. So it's in China, it's a very segmented, and if you don't visit, you really do not know.
We travel because we like to connect locally with our markets. We think it's very important to meet face-to-face with management. We always see management before we make an investment. This is particularly true in the case of off-benchmark stocks, which may not have as much of a history in the market, coming to the US to see investors. And so we always like to go there and square up what we found in the office, doing our financial and strategic analysis in the office, with what management is telling us firsthand when we see them. It's also important to live in an emerging market for a couple days, a week. That way you can see what's powering the economy, what consumers are buying, what services they're looking for. That can also give us an idea of new opportunities we may not be aware of.
It is typical for any of the analysts to spend as much as 20% of their time overseas. Traveling is an integral part of what we do. It's very important for us to visit the companies, to see them, to kind of kick the tires in the place where they are. If they are telling you a certain story of how things are progressing, perhaps on the consumer space, perhaps on the healthcare space, you want to see that hospital, you want to see the product and the take-up that is getting, and who is the consumer, or who is the client perhaps, so you have a better understanding of who they serve, what they provide, and how well positioned they are within the scope of what they do.